So you've decided you're going to finally start a business this year, or maybe you're already in the process of getting that business started, or maybe you started the business not that long ago. And you hear people talking about things like income tax, sales tax, revenue, expenses, invoices, and this all just sounds like jargon in your head. You're getting really anxious and nervous and you just don't know where to start. All you really want to know is what you need to do so that the CRA doesn't come and arrest you. Sound familiar? Don't worry. I got you. I've been sharing Canadian small business advice over on TikTok since about 2020. And in that time, even up until now, the most common topics that I talk about and get questions about are bookkeeping and taxes. So today I want to talk about the fundamental things you need to think about when it comes to bookkeeping in your business if you are in that sort of beginning stage or are planning on starting a business in 2023. I do just want to preface this video though, before we get started, that I am not a lawyer, I am not an accountant, I am just a small business owner who shares what I know that I have learned through the process of running my own business over the course of the last 5 years. When it comes to taxes and finances in your business, I always recommend that you speak to a professional that can give you a clear picture and clear advice based on your specific situation. All that being said, let's go ahead and jump right in. First things first, you want to make sure that you're keeping your personal finances separate from your business finances. This means you're going to want to open a separate bank account. And you want to make sure that all of your business transactions are coming in and out of that account. Now, often I get asked, what bank account do I recommend, or does it have to be a business bank account? Can't I just open a second personal bank account? And here's what I'm going to say about that. In the terms and conditions for most banks, this is in Canada specifically, there is going to be a line that says something along the lines of not using the personal bank account for business purposes. And if you get caught using it for business purposes, they have the right to close the account. For example, my personal bank account is with Tangerine, and in their terms and conditions, it states the Tangerine checking account is a personal bank account and may not be used for business purposes. If Tangerine suspects your checking account is being used for business purposes, we may close your checking account. And the same goes for most, if not all, banks in Canada. Sure, as a sole proprietor in Canada, you are the business, and so people like to use the argument like I am the business, so therefore it's still personal. But in my opinion, when there's so many free and low cost options out there, why would you bother? Personally, I use the RBC Digital Choice Bank account, which costs me $5 a month, and I have had no issues with that whatsoever. I was also able to open a MasterCard on that bank account at no extra charge with no annual fee. Other options you could look into would be the TD Bank Basic Business Plan or the BMO e-Business Plan. And I'll actually link a TikTok video down below that I did that sort of differentiates these three options and explains the pros and cons of each, all of which are super easy to set up and can be applied for online. So now that we have somewhere to put our money, we want to think about how we're going to be tracking those transactions. This could be something as simple as an Excel spreadsheet. I actually have one available to you for free. It's in my small business checklist, which you can find linked down in the description below. But if you're someone who would prefer to use a software, there are a ton of great options out there. I personally use Sage Accounting, but there is QuickBooks, Wave, Xero. Lots of different choices out there for you to kind of pick from and experiment with to see what's the right fit for you. Really, especially in the beginning, whether you're using Excel or a software doesn't really make much of a difference. You just want to make sure that you have a place where you are tracking the money coming into your business and the money going out. I literally only switched to a software this year in 2023. So that's not to say that Excel is bad or that it won't work. I used it for 4 years and it served me just fine. Just find a system that you like, a system that works for you and that's easy for you to understand. So again, you can track all of those transactions of money that's coming into the business. And every time you're spending money, you're recording each of those sales as well. I promise you that by staying on top of your bookkeeping, I like to set aside like a few minutes or an hour every week where I can go through and kind of just make sure everything is looking good. It's going to save you so much stress and will save your sanity when it comes to tax time. And if you're a business that collects sales tax, which could be like a whole other video in itself, this is something that's going to be absolutely necessary because in order for you to calculate how much you owe back to the government in your GST, HST, PST payments, you need to be having a system where you're tracking how much you're spending and how much is coming in. Next, we want to make sure that you have a way of tracking and organizing all of the receipts in your business. If you're using a bookkeeping software, this is especially easy because you can actually do it right inside the platform. But if you're old school like I was up until recently, I would recommend using a Google Drive where you have folders for each year and then folders for each month. Or if you're super old school, you can always use one of those like old school accordion files and then just have a slot for every month of the year. Keep in mind, in Canada, as per the CRA, you are allowed to scan receipts in their original format and use that as like a digital proof, so you don't have to hold on to all of the paper. But at the end of the day, the choice is yours. For a long time, I kind of kept paper receipts paper and digital receipts digital, and then had like 2 places I was storing them. But now I just do everything digitally. Just please keep in mind that you need receipts for every purchase you are claiming. Unfortunately, if you lost the receipt, I would not recommend that you include that on your statement, because in the event you were to get audited, the CRA is going to want proof that you purchased the thing you said you did. Otherwise, I could just go out and say that every week I bought a new iPhone and not have any proof for it, and where's that going to land me? It's better to be honest, be on top of your bookkeeping, and keep things nice and organized for the event you got audited, but also for tax season. It just makes it so much easier. If you have questions about any of this, just let me know down in the comments. Lastly, I caution you to set aside a percentage from every single sale you make in your business for income tax purposes. Too often when we get started out, we get so excited that we're finally making our own money that we go out and we spend it all. So again, as someone who is not a tax or accounting professional, I always recommend that most people start by setting aside anywhere from 15 to 30% of every single sale they make. So with some banks, for example, I bank with RBC, and they did this for me for free. They let me set up a second checking account. So every time I make a sale in my business, I can actually just shave that percentage off the top and move it into that separate account so that I'm not even tempted to touch it. Now, obviously, I recommended anywhere from 15 to 30%. The specific percentage that you decide is going to be based on your specific business, how much revenue you're generating, and of course, if you have any other sources of income, that's going to come into factor as well. Especially if you own a sole proprietorship like I do, because when you are a sole proprietor, your business income is also your personal income. So if you have a job or another source of income, it all kind of gets lumped together in terms of what tax bracket you fall under. So if I make $30,000 at my job and $20,000 in my business, my total revenue is going to be $50,000. So just keep that in mind when you're trying to determine what percentage you might fall into, and you can simply just Google the different tax brackets in Canada to give you a better picture. Or of course, speak to an accountant and they're going to be able to better advise you. Honestly, my motto is usually to aim a little bit higher than I project, and this has worked out really well for me over the course of the past 4 tax seasons that I've been through, because essentially every time I always end up with extra money because I've put aside more than I owed in taxes. And then it's kind of like I got a tax return, and I can use that to either buy something personally for myself, or usually I use it as an opportunity to upgrade my technology. So last year I bought a new MacBook Pro. A few years ago I bought an iMac. I've upgraded my camera, etc. Just please don't be like the people I see all over the internet who are constantly complaining at tax time that they owe so much in taxes and don't have the money because they spent it. Because I'm sorry, but that money wasn't yours to spend. Just like when you go to a job and you make X amount of dollars, your employer cuts that tax right off the top. It is now your responsibility as the one who is employing yourself to do the same. Taxes in a small business are no different than the taxes you would pay if you worked for someone else. Not to sit here and lecture you like your mother, but the more you avoid your bookkeeping, the more difficult it's going to get for you. And that's why I advise that you set aside a specific time every week. Fridays are great for this, to make sure that you're tracking all of your revenue and all of your expenses and reconciling everything that's going on in your bank account and in your business. Not only is this going to save you a huge headache at tax time, but it's actually going to give you a better idea of what's going on in your business. My favorite is always watching the actual profit graph. So a lot of the times we hear people talking about like revenue in their business, but that doesn't account for how much it cost you to make that revenue. So if we take revenue, we subtract our expenses, we're left with how much profit we're making. And if we're staying on top of our bookkeeping, we can actually get a clearer picture of this day to day, month to month, week to week. Now, of course, most importantly, I couldn't make this video without lecturing you on the importance of speaking to a professional. Whether it's an accountant or it's a bookkeeper, you really just want to make sure, especially if you are new in business, that you are following the rules necessary for you to be successful. I am not an accountant. I am just a small business owner, and I always tell people, do not take all of your advice from random strangers on the internet. If you liked this video, be sure to give it a thumbs up. Consider subscribing to my channel. Follow me over on Instagram and TikTok for daily small business tips. And if you want to know more about starting a business in Canada, go ahead and watch this video right here.